What's going on, everyone? Jeff back with another video. And so pretty much across all sectors in the past month, really starting here around September 2nd, the market started selling off. And even right now, as I'm publishing this video, early market futures for tomorrow are showing a pullback on all three indexes once again. And we might be in for a little longer of the indexes selling off. We really hit a high, like I said, on September 2nd, and that was mostly due to the excitement surrounding the split in Apple and Tesla stock, okay? Once those two things happened, it seemed like the market was a little bit overdone, and pretty much all tech stocks were due a big sell-off. That is exactly what happened since that time, and congratulations to those that predicted that correctly. However, there has been a couple of equities that have bucked the system and have gotten really bullish over the past month, Draftkings being one of them. I published a video about Draftkings back at the end of July when it was trading around the $36 mark. So since that time, it has traded up very nicely, now up around $54.95. And what I want to talk about in this video is Draftkings headed to $70 a share this year in 2020. Right now, while the markets are being very volatile, seems like we get 1 day or 2 days maybe back to back where we get some gains followed by 2 or 3 days of sell-off. Draftkings has just continued to push ahead and is up over 50% in the past month and has seen very little stalls in the stock price. So we're going to look into some of the catalysts that have pushed Draftkings up. We're going to cover some of the events going back to the last video I make. I will have a card come up right now with my Draftkings stock analysis video. Make sure to go back and watch that. And then towards the end of the video, we'll even shop some call options and kind of check out the pricing there. Very expensive, and very rarely do those options get a breather. However, they might be profitable to jump in on at the right price. So before we get started, guys, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. Let's take a quick look at last quarter's earnings for Draftkings, and their EPS is very negative. As you can see here, they reported earnings on the 14th of August, so this is about 2.5 weeks after I published my first video, and they missed on EPS by 38 cents, okay? Their actual EPS was a negative 55 cents, and they're definitely reporting in the negatives, and that is the first thing we probably need to discuss. Even though this is a very growing platform, Draftkings is not yet a profitable company. And another thing I've noticed today while watching sports, Draftkings is advertising on everything. I need to take a look and see what their advertising budget is, because I have seen them on Twitter. I've seen them on nearly every NFL, NBA game. I've seen them on StockTwits. I've seen them on Facebook. So there is no telling what they're spending on advertising right now. However, that is also something that can really push their platform to grow. So as of right now, Draftkings not a profitable company. The revenue of $70.93 million actually beat by 1.19 million. So not the best earnings, okay? However, their forward guidance does look a little better for the quarter that's going to end in November, okay? So their estimated report date for the next earnings report is the 14th of November. The EPS estimate minus 33 cents. Keep in mind, they're not going to be able to push out really efficient numbers simply because COVID-19 has hurt this platform so severely, even though now we are seeing a big recovery in sports. Okay, we have NBA playoffs, Major League Baseball, NFL is back on, and so there's a lot of sports, and there's even quite a few things that are going on in college football that is really pushing this stock up too. And you could very well see this revenue estimate of 129.16 million get blown out completely. I'm not guaranteeing that, but the key to this platform growing is as simple as having a lot of sports to bet on. It's really just that simple. They're advertising everywhere, and this platform is definitely growing right now. So this was also some statements they made after their earnings report, is that as sporting events begin to resume, the company is seeing increased engagement with its sports-based product offerings. This is contributing to sequential month revenue improvement during the second quarter. This positive momentum has accelerated with the return of the MLB, NBA, WNBA, NHL, and MLS. And then really since that time, we got the NFL, and now college football is also planning a return as well. This is something very spectacular to look forward to, is that looking ahead, Draftkings sees revenue of $500 to $540 million for the full year of 2020 on a pro forma basis. Growth is still on the agenda, so they want to grow this platform. That is why this stock trades the way it does. They are focused on growth and expansion. Might be several years before they're efficient if they continue growing this platform. And we could see, 5 to 540 million by end of year 2020. I think there is still a very big move that could be made in the stock price. That's one of the reasons why I think we will see $70 a share before the end of the year, and perhaps a lot sooner than you may think. Now, there's been quite a few events that continue to give DraftKings' trade momentum. I'm just going to try to hit the main ones. Back on September 7th, that's really when we saw a peak in the markets. DraftKings soars after Michael Jordan comes on board as an advisor and an investor. Now, this will give Jordan an equity interest in DraftKings in exchange for providing guidance and strategic advice to the board of directors on key business initiatives undertaken by the company. Now, right off the bat, really since this statement has been made and since this has taken effect, you have seen their advertising get scaled up a lot. I don't know if that is directly from Michael Jordan. I don't know if he is the one that has that vision there, but DraftKings in advertising has scaled up massively in the past month, and that's accommodated perfectly by the return in sports. On the 9th of September, DraftKings got a bullish call from Evercore as they start coverage on DraftKings with an outperform rating on its view that shares are actually undervalued due to the company's long-term growth potential. And I really can't help but agree with that, simply because 2020 has been a miserable year for sports. And of course, what's going to get affected directly by that is sports gambling. Evercore's statement reads, "Our call on DKNG is fairly straightforward. The market underappreciates the pull forward in the U.S. states, plans to legalize online sports betting. Percentage of U.S. citizens with access to online sports gambling is set to increase from 10% currently to more than 40% by the start of the 2022 NFL season. Our thesis is that the legislative acceleration will compound on DraftKings technology, customer acquisition cost advantages, leaving shares undervalued relative to near and long-term growth potential." That is another thing that is really going to build this platform and help them grow, is accelerated legislation. Each and every time a new state gets passed for sports gambling, that is money in this company's pocket. Now, this is possibly the biggest news DraftKings got just 5 days ago on September 15th, when they announced a new deal with ESPN to be the co-exclusive sportsbook link-out provider. Prior branding builds deals including Michael Jordan and the Chicago Cubs, all of which are elevating the brand and further legitimizing sports betting. So they got this big deal with ESPN. That's really going to be a long-term boost. As a result of that, Oppenheimer hiked their price target to $55 after holding a virtual Bull Bear event on legalized sports betting. The key takeaways are that DraftKings and FLTR's fondles are benefiting from significant built-in advantages. Those are difficult for legacy casinos to compete with simply because of the reach. Anybody can do this with their phone or a tablet. Millennial sports fans' strong affinity towards Barstool Sports likely creates formidable competitor through its combination with Penn. That's another stock I have on my daily watch list right now is Penn National, ticker symbol PENN. So if you're interested in DraftKings, I would also keep a close eye on Penn National because that stock is making big moves too. Now, Penn National has not quite seen the same increase in stock price that DraftKings has over the past month, but is still up 24.96%. Like I said, it does pull back a little bit more, just a little bit more volatility than DraftKings, but this stock is showing a lot of growth as well. So make sure you also track Penn National. They kind of trade together. They have sympathetic gains and losses, and especially when more and more legislation comes out, both of these stocks will grow together. Alright, so the last thing I want to do in this video, guys, is let's price some options up for the month of January 2021. So right here, guys, I'm going to grab the January 15th, 2021 call options. Let's take a look at some of the prices you'd be paying for DraftKings right now. Around a $70 strike price, okay? As you can see right here, for a $70 strike price, you're going to be paying $645 per contract. That is pretty expensive, and it just gets higher and higher as you go down. You would want to look at some of the options that are in the money already if you want to make quick trades. If this stock does get a pullback, like I said, these $50 strikes would cost $1,330 per contract. It's pretty expensive. and hitting that $70 strike seems pretty likely to happen. And now, again, this is kind of a sensitive stock. You can't say for sure what's going to happen. There might be some big legislation that comes up to work against these stocks. So definitely always, if you're going to play put options on a company like this, try to wait till it's pulled back a little bit. You know, you don't want to buy into those really, really bullish runs. And maybe just for fun, let's look at call options for about 2 years out. They're very, very expensive, about $1,600 and $1,500 for the $70 strikes, and about $1,395 for the $75 strike price, that being January 21st, 2022 expiration. So if you don't want to spend a large amount of money like that, perhaps just look at weeklies like September 25th or October 2nd expiration. And now they start getting a lot more affordable, okay? Again, will DraftKings hit $70 a share by October 2nd? Probably not, but you could look in this $55 to $60 range and try to see how close you will get to that break-even point, okay? Because right here, the $55 strikes for October 2nd, that would cost you just a little under $400. You could probably make a couple profitable trades there. And as you go up, obviously get a little cheaper, but the risk goes up as well. You have to meet these certain price points. This is a good vehicle to trade with. So again, I'm not making any recommendations on any of these options, but if I'm going to be trading, you know, DKNG call options, I'm probably going to stick with the weeklies for now, because the January call options are just a little bit too expensive. I don't want to put that much money into one trade. Usually, sometimes I like, if a stock does pull back, I'd like to buy another option or two to improve my cost basis. So that's all I got for the video, guys. Make sure to go down to the comments, share your thoughts and opinions with me as always. Thank you as always for watching the video, and have a great day.
Out.